Good morning, everyone. Good morning, everyone. Can you hear me?
I think so.
Excellent, excellent. Duncan, I'm just going to make you co-host if I can.
Good morning, good afternoon, everybody. I think we've got some good news coming this week, haven't we? Is this one? Is this what we're going to call this? The reverse ferret edition?
Sorry, the reverse what?
The reverse ferret.
What's the reverse
talk
ferret?
about today? What's the reverse ferret? When we change our minds on something graciously. Andrew's coming to join in the conversation.
Did I miss something? Did I miss something?
No, I don't think you did.
Can we start again? Luca, you were going to apologise.
Didn't you?
Yeah, we're talking about ferrets, Andrew.
More U-turns in the Conservative Party this week. But we were grateful to know. Anyway, I'm going to leave it with you, Luca. Hello, everyone.
I don't know. By the way, Duncan, I got no clue what you were going on about. Anyway, you can tell me later. Okay. Good morning, everyone, and welcome to the Crypto Hour. I know most of you have been here before, but for any new faces, what I'm going to do for the first 20 minutes or so, I'm going to go through some items of news that I think is worth spending some time on, and then we'll open the room up to anything that you have on your mind. So any way I can help you, I'll try to do my best.
May I interrupt you just one more time? Would you please drop me the YouTube link, please, Luca, so we can get streaming in the circle as well?
I put it on Messenger. Have you received it?
I don't believe I have. I have now. Yes, thank you. Yeah. Apologies, everyone.
No problem. Okay, so let's start going straight away. There's obviously, you might be aware, there's been quite a lot going on recently. So there's been quite a lot going on this week, and I've got a few items here that I would like to discuss with you. I want to start with something that's quite fundamental. This is Gavin Wood, is one of the founders of Ethereum, one of the original founders of Ethereum. Actually, is the one that devised the programming language Solidity. That it's used to program smart contracts in Ethereum. So it's at the base. It was the chief technology officer, let's put it that way, of Ethereum, which he then left in 2016, and he set up Polkadot. Which is kind of like another big item, because they're coming to market in this last quarter and launching their parachains now in November. But the reason why I wanted to discuss it is something that is just a small phrase, in a speech that he gave at the Shanghai International Blockchain Week, which some teams have really lost sight of the fact that decentralization and security are not optional features here. This is not something that we can cut corners on. Okay, so it is, as there is more and more hype around cryptocurrency, we got to remember what it is important, and especially because we are trying to create here something that is different from what's already out there. So we're talking about, in particular, we started with the financial system. So what's out there already? We got the existing financial systems, we got Visa and MasterCard. So what is going to replace the Visa and MasterCard is not more of the same. Okay, it's not American Express is going to, for example, to replace Visa and MasterCard. It's a different paradigm altogether. Now, if we don't concentrate on decentralization, then what we are doing is just replacing one thing with something, which is pretty much the same, but called under a different name. And especially as there are many projects that are coming to market and trying to say, we're great, we're fantastic, we can do everything in one zillionth of the time that it takes to do it on Bitcoin, and we're fantastic, we cost very little to operate on, and come to us, come to mama. Okay, the problem is that if the decentralization and security are not in place, this are just basically another bank, because banks are very fast. You can do a transaction in a shop on a banking network in fractions of a second, as you can do transaction on some of the new networks in blockchain in literally fractions of a second. At what cost, though? And this is something that you got to have you got to understand, especially if you are kind of like new to the crypto sector, and you're jumping into the sector, whatever project is being talked on in the news. So you have to have a filter to understand which projects are actually doing work that it's sustainable and is still going to be there in 1 or 2 years' time, or the projects that are kind of like hyped and are there now, but they may not be as prominent in 6 months' time or a year's time because their fundamentals are not strong. Okay, so it just something that I want to make you understand, because often get questions, what about this project? What about that project? And it's something that it's that project is gone up whatever 500% in the last 3 minutes, which is fantastic. But it's great if you are all day in front of your computer trying to take advantage of things that are growing fast. But if you are looking to understand what this technology is doing and how this technology can change the world, then the project that will change the world are particular projects that they're putting the building blocks in place very carefully and doing things right from the beginning. Okay, so this is just kind of like a little bit going off the tangent, but I just wanted to put the brakes on sometimes, especially in a week when we've had Bitcoin hit all-time high, we had Ethereum hitting all-time high. There is a lot of money coming into crypto, and so it's important to understand what's going on. Now, as you can see now, the market cap as well, general market cap is $2.75 trillion. So we are at an all-time high in general for the crypto industry, not just for Bitcoin and Ethereum, but for the all money that is floating around in every single project. And as you can see, we got more than 10,000 of them that are. By the way, they're not all the projects. There's a lot more than that, but those are 10,200 that are on CoinGecko. So you can imagine, if we look at the main ones, obviously are as I say, the top 10. And we see Bitcoin now is gone over 1 trillion again. Ethereum is now over 500 billion. And then we go on to Binance, Cardano, Solana, and all the other XRP, all Polkadot, and all the other projects, And you can see now, number 9 and 10, you can see Shiba Inu and Dogecoin. You think, what are they doing there? How is a meme coin worth $40 billion? 2 meme coins worth $40 billion. But this is kind of the new paradigm where, what is anything worth? And really, I mean, if you stop to think about it, what is the value of any item that you can think of? And I'm not particularly talking about crypto, but I'm talking about, what it can be, what the value of this pen, what is the value of this phone, what the value of anything is what the next person is willing to pay for it. Okay, it's as simple as that. And when you understand that in investing, then you understand that some of these projects are valuable, not because of any inherent value in a Shiba Inu token or in a Dogecoin token, but this is the value of the community around these projects. They are worth that much because there are people that are willing to buy at this price. Now, if it's a good or bad idea, that's a different discussion altogether. But the whole point is that that's the reason why anything is worth a certain price, is because at that price you get supply meets demand. Okay, so people are willing to buy at that price, and there are some people that are willing to sell at that price in the middle. But and this is representative also of a new influx of funds in crypto that is in a way replacing funds that were deployed in two industries. One is the betting industry, and two is the day trading industry, which, a lot of people may think, well, it's pretty much the same, and you wouldn't be much wrong in that. So we have seen kind of like a movement of capitals that have come into crypto, not because what they think the technology can do, but simply because we're taking away somebody that takes some of our money, which is the intermediary. So we can do the betting directly in crypto, and we can do it directly on the market. Nobody else is involved, so nobody can take part of the profits away. Nobody can say, actually, I'm not paying that bet or not, but it's all automatic and it's all done straight away. So even in that case, there is value for people in those industries to do things on the blockchain directly. Okay, and we've seen a lot of this traffic is those industries coming into crypto. So just be aware of it, that where that money congregates, that money moves very, very quickly. So as it comes into coins like Shiba Inu and Dogecoin, just as quickly can leave. So we can see that Shiba Inu, for example, has gone up 163% in 1 week. Okay, which is insane. But at the same time, on other weeks, we can see going down 40, 50, 60%. Okay, so that kind of money moves very quickly, and just to be also very, very aware of it. Other big big shifts that are going on in crypto. This is kind of like a tweet that I wanted to, as we here, we in education, we're now starting to see some blockchain and digital assets getting into colleges and universities. This is one particular Wharton business school that are going to do a economic or blockchain and digital assets program. And you can see more and more of these are spreading out into, I can say, secondary and tertiary education. So in a lot of universities in the US now, you're going to start seeing blockchain courses being offered to students. And this is not one day too late. Because it's what the what the users are demanding, really, because it's what's required in the business world and in the workplace. Now going on to a different subject. Last week we're seeing the appearance of a Bitcoin ETF, and then we have the second Bitcoin ETF. Also on the market, and now we have over 40 ETFs that await approval. Now, not all of them are going to be approved. Some of them are going to be rejected. But now that the door has been opened, and we're seeing what difference. The Bitcoin. I've been telling you for months. The Bitcoin ETF approval is going to be a big deal. And what happens straight afterwards? Bitcoin hits a new all-time high. Okay, now. More ETFs are coming onto the market, so it's going to become easier and easier for institutions to invest in Bitcoin, and it won't be long before an Ethereum ETF as well is approved. Okay, with the effect it has then on Ethereum price as well. And then this is just, guys, what I want you to understand, I'm not saying rush into buying these things. Okay, what I'm trying to make you understand that this is kind of like a door being opened. It's the door for traditional investment vehicles like pension funds, investment funds, to invest in Bitcoin. And because of the rules that are surrounding some of these investment vehicles, they're not, at the moment, before this was launched, they were not allowed to invest directly into Bitcoin because they got strict rules on what they can invest or not invest on. Because an ETF is a product that you can purchase on a stock exchange and it's regulated, then it is an investable product for these institutions. So they can now deploy some of their funds in these, but before they couldn't. So it is basically a door being opened on trillions of capital. It's not all going to come into this, but a fraction of this is going to come in. So it's going to increase the flow of funds into cryptocurrencies. Bitcoin at first, but then as more ETFs come onto the market, this is going to spread into other cryptocurrencies as well. Probably Ethereum first, and then it's going, soon, I think within 1 year, we're going to see some mixed ETFs, kind of like a fund of maybe the top 10 cryptocurrencies or so, that will be available to buy in the not too distant future. And that brings me on to kind of like almost like similar to crypto, but it's an alternative way that there has been to invest into crypto up until the ETF was available, is to invest in some of the companies that invest in cryptocurrencies. And this, obviously, the most prominent one probably is MicroStrategy. You must have heard Michael Saylor talking about Bitcoin. Is everywhere. As soon as you type Bitcoin, you probably see half a dozen videos of Michael Saylor talking about them. And you can see they kept buying Bitcoin every single quarter, and they are now, MicroStrategy holds over 114,000 Bitcoin. Okay, which is quite a few $1 billion worth of Bitcoin. And so, for a lot of investors, that, for example, if you had a self-invested pension fund, and that you couldn't invest that money in Bitcoin directly, but you could have bought MicroStrategy shares, for example, because they got so much Bitcoin in the treasury, the price of the shares is closely linked to the price of Bitcoin. And there are other companies that are related to the price of cryptocurrencies that are already on the US, on the Nasdaq stock exchange, on the Canadian stock exchange as well, and it's an alternative for you to place some of your funds in and have some exposure to the cryptocurrency market without investing into cryptocurrencies directly. Okay, so other bits of news. Obviously, you must have heard about Ethereum hitting all-time highs overnight. After this, they call the Altair upgrade, shows clear path to the merge. So this is what this means, is that all these upgrades need to happen before Ethereum can transition from a proof of stake network to from a proof of work network to a proof of stake network. So with each upgrade, we are getting one step closer to having to Ethereum transition into a proof of stake network. I mean, this is something that's been eagerly awaited for years. And if you know anything about Ethereum, or if you try to do anything on chain, you would have known that transactions are horribly expensive. At the moment, you want to do something on Ethereum, you're going to have to part with about $200 to do anything. Even to send, if you want to send some I don't know, Tether from your Binance account to your to your Kraken account, let's say, that's going to cost you $200. Even if you want to send $10, how's that? It doesn't make sense, does it? It doesn't make sense. And this is all the problems that all the bottleneck that Ethereum has had to deal with. And this is part of the reason why we've had so many networks that have been successful this year, because they played into this narrative of Ethereum being expensive and saying, okay, come and do something on our network because you can do it for less and with faster, etc., etc. So that's the reason why, for example, Binance Smart Chain was successful at the beginning of the year, and then more recently we've had Solana, for example. We had Avalanche, Phantom, Harmony. So many different projects are being successful because they have offered alternatives to the Ethereum network at a fraction of the cost and at much higher speed as well. But we're getting closer to that, and this is the ideal solution. Everybody really wants to be on Ethereum rather than on, something similar to Ethereum. But at the moment, it's really not possible because it's too slow and too expensive. Once we get to the once we get to the proof of stake network, that will be a definite improvement on that. And also we have all the layer 2 solutions that are actually coming online. And this is where transactions are happening on, let's say, in a side chain away from Ethereum, and then they are recorded, they batched in a big bunch of them and recorded on the Ethereum blockchain. Okay, so the proof of stake is going to improve the network anyway, but it won't get all there by itself. But if we put that together with the layer 2 solutions, then we'll see, many more transactions going on, with some transactions going on the blockchain, some away from the blockchain, and then just recorded in a big bunch on the Ethereum blockchain. Okay, and I think it's the last bit of news that I wanted to discuss with you. Still on this, and there was actually in this article there is a reference to El Salvador that keeps progressing and doing really well. Since they have released the Bitcoin as legal tender, so just over a month now since that was was put into place, and this is being watched very, very closely by a lot of other small countries. They are thinking of doing the same thing, but not just small countries, but even big countries. Because what El Salvador has done, and have apart from making this possible, they have put Bitcoin ATM machines everywhere in the country, so that people can go and deposit their US dollars and put them onto the Bitcoin account, or they can do the opposite. So they can go there with their phone, log into their Bitcoin wallet, and download, and get cash, US dollars out of the machine. Now, if you think this is something that only El Salvador is doing, then you might have heard of, if there is anybody here, I don't know if there's anybody here from the US, you might have heard about Walmart. So let me see. Okay, so Walmart has announced that they will place 200 Bitcoin ATMs in their shops, in the big supermarkets. I mean, they're huge supermarkets. They're more like almost like mini towns. Sometimes some of these, some of these supermarkets are so big that you need the actual trolleys have GPS on them to help you find the items that you want to buy. Believe it or not. So why is this big news? Because Walmart is everywhere in the US. Like in the UK, it would be Tesco, Sainsbury's. Kind of like it's your local place where you go and buy your groceries. A big supermarket. So the fact that they have got these machines, it means that even if it's just like a drop in the ocean, it means that it makes it more real for people. And so, I'm not talking about like you and me. Obviously, you're in this room, so you're already interested in crypto. You're already taking that step. But for many people that don't understand about crypto, this makes it real. So look, it's in Walmart. You can do it. You can do it there. So it brings such a big number of people that I would never have gone into crypto. Now, because it's in Walmart, they will consider it. They will think about it. They will talk about it on social media. So this is kind of like a snowball effect. Something like this, it really creates a snowball, and makes it, you take it from a 5% of the population talking about something to 20 or 30% of the population talking about the US with over 300 million people living there. So it's many people that will put some money into these cash machines and create a new Bitcoin wallet where they never would have done before. Okay, so it just little steps. Every week we'll find something new that makes you realize how this will really change everything, guys. And we still early days, and kind of like I almost can't believe myself that so much is going on in such a small space of time, because nothing like this would have been possible 9 months ago. Okay, I had to really scan very hard to find any articles about crypto in December or January. And this is now wherever you look. I mean, you can't open a newspaper without 2 or 3 pages at least being dedicated to crypto in one way or another. Okay, so I think I've done about half an hour and about more than I wanted to on me just talking. Let's get you involved. So let's have some questions now. All right, Duncan, I don't know if you have time to look at some of the questions, and if anybody has posted any yet.
Well, actually, it's been me posting the questions. I've been doing a survey while you've been talking. So maybe people haven't had a chance to get their questions in, but if you've got any, guys, of course, raise your hands, unmute yourself, or drop them into the chat. Jonathan's just joining us. Andrew did make a point. It wasn't really a question. Maybe I'll try and turn it into a question, don't know. Or maybe the question is, what do you think about this? He said the crypto market is so new for a lot of people, and people who see a coin very cheaply, some of the smaller coins, and I think you were talking about the meme coins at the time. He's saying surely they'll be tempted to try and get lots of them because they're cheap, just in case one day it does do a Shiba. And I can see his point, because when we first started looking at it, it was like, well, look, you can get 50 million for a $5. I mean, it's a kind of a no-brainer, and anybody who did do that would be really, really happy now, because they would have turned their $5 into about $3,000 or whatever. So yeah, what are the thoughts around that? Is that any kind of strategy? Can it hurt them?
Yes. Okay, let me just show you something actually very quickly. Let's go on to again. Let's go on to screen share. And okay, if you're looking at a project, okay, and let's start with the first one, Bitcoin. This is CoinGecko, okay, and we got 2 figures here. One is circulating supply and one is total supply. Okay, so, or max supply, you want to call it. So the max supply is how many coins can there be in circulation once every coin has been minted. Okay, in the case of Bitcoin, we all know it's 21 million. And this is how many have been minted so far. So there's still about 2 million that haven't really come into existence yet. Okay? So to make you realize, how do you value how much something is worth? You know, it's basically, you say the price of a coin by the number of coins into circulation, and that's the market cap. Now, if instead of 21 million, if I add a couple of zeros, so becomes 2.1 billion coins, the Bitcoin in circulation, the price, you would have to take a couple of zeros out of a couple of commas, points. So Bitcoin will be worth $600 each. If I make it into 2 trillion, how much would Bitcoin be worth? Because you only multiply, you divide the value by the number of coins in circulation. So this is what I'm trying to make. The figure that you want to pay attention is the market cap. Okay, because it doesn't really matter how many coins you split it into. This is the value of the project. So in Bitcoin's case, is $1.15 trillion. Okay, because there are a maximum of 21 million into circulation, that we come into this price here. But if this number was different, then that number would be different. So if we instead, we're going to look at Shiba Inu. Where's Shiba Inu? Shiba Inu. Okay, we can see that number is slightly different now. It's not 21 million anymore. What's that number? How many zeros are there? So there's 1 billion. Wow. So 3, 6, 9, 12. What's 15? Is something one with 15 zeros? What do you call that? It's not. It's more than 1 quadrillion, isn't it? So somebody can tell me what that is called. But so you divide this market cap here by the number of coins, that will form the supply of Shiba if they have a maximum, because some coins have a maximum supply Some coins don't. They're open-ended. Okay, and so the reason I would say, well, is Shiba Inu cheap? Yeah, this is a kind of like a fraction of a cent of a dollar. So if you buy one token, is cheap from that point of view. But what you got to think about it, is this project cheap at 39 billion? Or is it expensive at 39 billion? So don't look at the price for each coin. Just look at the price, for the project itself. So does it make sense that Shiba Inu is worth 39 billion or not? And that's the way that you should judge a project, not looking at the price of a single token, because that doesn't mean anything. Because if we change this number, so how many tokens are in circulation, obviously that will change the price. In the same way, you get a company on the stock market, is there's a stock split. So instead, for example, Apple, say the shares of Apple have become too expensive, and they become $10,000. So let's say, okay, let's split every share into 100 shares. So you have the same value in your portfolio, but instead of having one Apple share, you have 100 Apple shares. They still comes to the same value at the end of the day, because instead of being worth $10,000, now your Apple shares are worth $100, but you have 100 of them. Does that make sense? So, but I do understand that many people, especially newcomers, made that mistake of thinking, gosh, I will buy that because it's cheap. But you got to understand that you could put the money that you used to buy, let's say maybe $1 that you buy. I don't know how many Shiba Inu you can buy with $1. And you can put the same money in Bitcoin, because you can buy $1 worth of Bitcoin if you wanted to. You don't have to buy a round number of cryptocurrency coins. You can buy any fractions of it. So yeah, maybe it doesn't sound as sexy saying I bought one millionth of a Bitcoin as saying I bought, I don't know, 1,000 Shiba Inu coins, but it's the same value. So this is what, concentrate on that when you look at projects. Look at their market cap rather than looking at the price of the tokens. And the other thing that you want to look at is the monetary policy. So is this a limited supply token or not? So what's the inflation? What's the inflation of Shiba Inu? How many coins are created each year? They're being put into circulation. Because you're buying something, if the inflation is some coins maybe 20-30% a year, and you're just keeping them in your wallet, means that you are, unless it goes up in price by more than that, you are losing 20-30%. You see what I'm saying? So it is something that you got to consider when you're buying cryptos. It's not just the price of the token, because they're not all the same thing. They all work in different ways, and they're not regulated like the stock, the stocks on the stock exchange.
Andrew made the point that 50% of Shiba, I think he means, have already been burnt to date. Does that change anything?
Well, obviously, you talk about the the number of coins that are in circulation. It's more like you say, yeah, the tokens are being burned. How many are being created? You see, because there are a certain number of coins. I mean, Shiba Inu, from what I can see, I mean, I don't know. I haven't really studied Shiba Inu because I really don't care about the project itself. But it does seem to me that it doesn't have a cap. So it doesn't have a maximum number of coins in circulation. So they can burn as many as they want, but how many are they creating? So at the end of the day, what you want to know, at the end of the year, there's going to be more coins into circulation than today or less coins? Because that will make, this is the numbers that you need to know. These are the numbers that you need to know to make your decisions, okay? Because you understand if, okay, it's here an inflationary project, is a deflationary project. Is this kind of like a neutral where you're going to have the same number now as you're going to have in 12 months' time? So I don't know, honestly, I haven't studied the project. I'm just telling you the things to look at. Andrew, I'd say, honestly, you can tell me whatever you want about Shiba, because I really don't know anything about it. But I'm thinking about the things that you got to ask yourself when you're deciding to invest in something or not. Because 99% of the cryptocurrency coins that you buy have got an inflation rate attached to it, including Bitcoin. Bitcoin's inflation rate at the moment is about 1.5%. Now, obviously, you put that against, that on average, Bitcoins have made about they've increased about 200% a year more. Then, then you make a judgment on that. Other coins have different different monetary policy, different inflation rates, and so on. But what do you think? Where do you think the staking rewards come from? Staking rewards are basically inflation in a particular coin, in a particular project. That is distributed to the people that are staking those coins. So let's say, for example, that there is the inflation rate of a particular coin is 10%. Okay, and only 50% of the holders of that coin actually stake it for rewards. That means how much are those stakers going to get in rewards? They're going to get 20%, because if there were 100% of people that were staking coins, then they will get 10% in rewards, because that's the inflation rate. But because only 50% of the people are staking it, so that reward goes to the people that are staking the coins. So if there was only 10% of people that are staking that coin, the rewards would be 100%. You see what I mean? So this is what happens. This is the token, what is called tokenomics. So the economics of a particular token, the monetary policy of particular tokens influence the value of it, the rewards you get, and how many coins are coming into existence every year. What Ethereum, for example, have done this year in August, they introduced burning of a part of transaction fees in every transaction. So Ethereum is an inflationary coin with no cap. Okay, so you don't know how many Ethereums will ever be in circulation, because it doesn't have a maximum cap. Burning means, Julia, just so that question pop up. Burning means destroying tokens. Okay, tokens that exist today don't exist tomorrow. So that's what tokens that are being burned. That's the phrase they use. So if you burn more tokens than are being created, that means at the end of the year there's going to be less coins into circulation than at the beginning of the year. If instead you create more tokens that are being burned, it means at the end of the year you're going to have more tokens in circulation than there were at the beginning of the year. Okay, so that relationship changes with every single token. And some tokens have got burn as a function, some tokens haven't. For example, Cardano doesn't burn any tokens. The Binance coin does. So there isn't a shortcut really to all these things, and this is why we have in this room every Friday, to make you understand some of these points. But it does take some work to find out these details. Okay, so this is what I'm just trying to get you to understand. It's not just watching a price and clicking buy or sell. Okay, there's a little bit more to it. Okay. Any Eric is asking, how is a inflation on a coin decided? It's decided at the beginning. So you look at the white paper. We'll have a section about the tokenomics, and you can read it in there. From the moment it was being created, it will tell you exactly what the schedule is for the release of tokens. Okay.
Julie wonders, what does it mean to burn? Does it mean that these are tokens people own, or are they just part of the supply, or what tokens get burned, and how does it work?
It depends on each coin. So this is really in Ethereum's case, whenever you place a transaction on the Ethereum network, you pay some fees. Okay, and those fees, part of those fees, those are called the base fee, are now being burned. Okay, so they're destroyed directly by the protocol, by the Ethereum protocol. Okay, so those tokens don't exist after they're being they're being paid by people that paid them for transactions. They're being destroyed. Okay, this is what it means.
So a question from Vladimir, total beginner, and there is a question, a longer question from Pierre that we could maybe talk about in a minute. You can see that. Tried to open a crypto account this week so I can start investing. However, I've not been able to transfer money from the UK bank. Yeah, tried a couple, but it's been declined. This does seem to be a recurring issue lately.
I assume it's Binance. I assume it's Binance, and Binance, yes, there are many banks that have gone to war against Binance. And you won't be able to, unless I think you have a Revolut account or Starling Bank account. But you can use Kraken. Kraken is fine, and you can transfer to Kraken from any bank. And they haven't gone to war against Kraken yet. Or Coinbase, or Gemini. You know, just Binance that they have a objection to.
Thank you. I tried crypto.com as well, and that didn't allow me either.
I don't know. So I'm not paid by any of these networks, but I do know that I use Kraken regularly. I transfer money in and out of my bank, and I never had any problems.
Okay, lovely. Thank you.
So I don't know if you noticed Pierre's question. It's he believes he might be off subject, but I don't think so. We have talked about this a fair bit in the past, but he's asking about the global currency reset and the quantum financial system. And is it a conspiracy theory, or will it happen? And is there any chance that we'll again see a change to a gold-backed currency? We have talked about this quite a bit. So any updates on that, in opinion?
Okay, guys. This is. Have you got any? Let's say bring it down a tag or two. Have you got the idea of kind of like the drip effect of water? Okay, water is really fluid, and you know, but at the same time, the dripping effect of a drop of water on a rock will dig a hole in the rock. Okay, and what happens as well is that, you know, these things will accumulate and accumulate and accumulate until you realize that an extra drop collapses everything. Okay, this is a kind of like a transition that started in 1971 when we ended the link to gold in a currency system. So we went from to the fiat currency system. Okay, and it's not that the currency system, you know, has worked up to now and tomorrow won't work anymore. It's been in the design of the fiat currency system, it's almost like designed to fail. Okay, and this is happening little by little by little. I know I've been talking about this even before Bitcoin was invented in 2008, when we had the subprime crisis. You know, I was telling to anybody who wanted to listen, not many people at that time, that this will bring a redefinition of the concept of money. Okay, because, you know, we are getting to the point now where countries, and this is not just the dollar, this sterling, or any other countries, every country across the world, every central bank has printed so much money that it will not be possible to pay back the national debt at all for any country. And there are countries now, they are basically in default already. So in the sense that, you know, if I have to bring it to personal debt, it's as if you had a credit card debt, and with everything you earn wasn't enough to pay just the interest on the debt. Just, you know, put yourself in that situation. So what would happen then? You would have to go bankrupt. Okay. Now, what happens to a country if it goes bankrupt? That's the question, because we're going from, Roger often talks about this anyway. We're saying we've gone from, you know, personal debt has then become corporate debt. Because what happens if you can't pay your debts, you buy some goods, company supplies the goods to you, you can't pay for them. So you go bankrupt, the company has a bad debt on their books, okay? Because they have some goods that we're expecting payment for, so they have got a credit towards you. They can't pay that credit because nobody there to pay it. So that becomes a bad debt on the company's book. What happens when a company fails? That then becomes a bad debt on the creditor of that company, which is normally the bank, the banking system. What happens when a bank fails? Who's the creditor of the bank? Then, apart from other banks, is central bank. What happens when a central bank fails? So we're going one step up every single time. And there is a point where there is nobody else left. And when the countries start failing, now we've seen it in Europe, for example, we've seen it with Greece example. Greece, it was kind of like a failed state. Because the economy was so small, Europe has managed to absorb it, really, because it only represented about 2% of Europeans' economy. But, what happens if you have, 20, 30 Greeces going at the same time? This is kind of like a snowball effect that will take down the current financial system. And personally, this is my opinion, okay? We had, last century, we had the birth of the secular state. So there was a split between, state and church, okay? But before it was just like one thing. Now we got two separate things: states on one side, church on the other. They're all existing separately. Okay, so I think what we're going towards a separation between state and money. So the way we exchange value, what we call now, money, which is not money anymore, is currency, by the way, will not be under the control of the state, but it would be then under the control of a set of rules that nobody can tamper with. And this is what, at the end of the day, this is what Bitcoin is, whatever happened now for 12 years, and there have been many cases where, it would have been advantageous for people in the Bitcoin network to change the rules. They haven't been able to change. Nothing has changed the rules of Bitcoin. So this is why people trust it, because they know, okay, there's nobody that can tamper with this thing. We know how many there are in circulation, so we understand, it's a simple supply and demand issue, and nobody can interfere with that. The US government can decide to print an extra $10 trillion because they feel like it, and devalue what we have in our pocket by 20%. If we have some of this stuff, I know that I can buy the same things in 2 years' time with what I have done that I can buy today. The same thing cannot be said of the dollar or the pound or any other currency you can buy. And this has been the big issue, is that we are seeing the detachment of currency and money, because one of the main functions of money, it's as a store of value. The moment you take that away, and they have taken away from 1971, then money is just a currency. It's not a store of value anymore. So you put, and because you put a bunch of banknotes in your mattress, you take it out after 10 years, they're worth a third of what they were worth 10 years ago. So it's not a store of value anymore. It's just a mean of exchange. And as a mean of exchange is a product. If you find a better product, you go to the better product. And this is what we are looking at now. We have found a better product that can do the same thing. And money is a big thing. So this is where we're sitting right now. But it doesn't mean there's going to be the end of everything. It just means there's a different way of doing things. The nation state can survive just raising money in a different way. We don't need to raise it by controlling currencies, because what do currency mean anyway now when we are trading with all over the world? You can buy from, why do you need to use the pound or the euro or the dollar when many of the trades are with other parts of the world that use different currency? Why not use a common currency? And if we have to use a common currency for global trade, then it's not fair that any one country has control of that currency. So, the de facto currency for global trade has been the US dollar. But why should we give the Congress or whatever you consider yielding the power on making economic decisions for the world to the US Central Bank or the US Congress or the US President, whatever it is? Why should Europe yield, or Asia or Africa base their commerce on decisions that are made in the US? It doesn't make sense. So that's my opinion, and I'm happy to hear different opinions. But I think it's maybe this transition will take 10 years or more, but I'm really not sure it can be stopped. Okay. So that was a big question.
That was great. Yeah, that was great.
Yeah.
No, it's a really important subject, isn't it? And actually, I know we talk about it quite a lot, but that's what it's all sort of. But that's the background to everything that we're doing here, isn't it? So it's nice to hear it from time to time. Thanks for asking, Pierre. A rather open-ended, but altogether simpler question, maybe from any. What are good stable coins? And I might ask. You know, we've talked about it again before, and we know that they tend to differ slightly. And which ones do you use, Luca? Let's remind Annie and everybody else.
Okay. First of all, actually, before I answer that, I just wanted to have a little end the previous you know, talking about in generic terms, but in practical terms, what that means for you and me. And I can tell you what I am doing in my account. I'm taking all my money away from currency. All my store of value is not in money anymore, okay? Is in assets, okay? And those assets are in different classes. So buy yourself stuff, guys. Don't keep it in liquid money, because that's like losing value by the day, okay? So buy property, buy, you know, precious stones, precious metals, whatever you consider being a good asset. And I'm not telling you one or the other. Crypto is one of those, by the way. But don't keep it in liquid cash, because unless you have a place that's paying you a lot of interest, because at the moment we are going to see very high inflation rates very soon. Okay. Now, talking about the sorry, Pierre saying, does it matter what currency you earn from these assets? Well, if it is an asset, it's an asset as a value. If you have an apartment, if you have a house, that is an asset. In, you know, whether you then decide to sell it and you accept, you know, let's say Australian dollars or whatever you use, or you sell it for a flock of sheep, you know, it's got a value that you can exchange for something else. Then, you know, what you use for the exchange is a different matter. And now we're talking about what are good stable coins. This is a kind of a difficult subject, in the sense that, are any stable coins good? Because stable coins is a way that a lot of liquidity is provided to crypto markets, okay? You know, almost like an unnecessary evil or crypto. But again, when you have a stable coin, you then have a third party there. Because what stablecoin is, you know, the most famous ones are USDT, USDC, for example, are the two most famous ones, and Binance US dollar. You are giving control of those funds to a third party. So USDC, for example, is the Coinbase stablecoin. USDT is Tether. What they say is, okay, you give us money, we give you the equivalent in the digital form of that money, and we keep that money safe. Okay, so we place it in storage in a vault in a bank in the US. Okay, so what's the difference between that and a central bank? There isn't much difference. So you have to trust a third party with that value. And there are big questions that are being asked of Tether, for example, because they're saying that you know, their mantra was that every Tether was backed by a dollar in a bank, in the vault of a bank in the US. And now it's actually appeared that that's not quite true, that they've invested a lot of these dollars in company debt, companies' debt. So that is not as safe as a physical US dollar in an account, but there is an element of risk connected to that, you know, because companies may go bust, and then, you know, some of that paper may not be worth much. And then also the value of all the Tether in circulation seems to be, the collateral seems to be lower than a 1-to-1 ratio. So this is the question. I mean, personally, it's not a good strategy to keep money in stable coins for storage. Okay, it's something that you use to go from asset A to asset B, but you shouldn't keep a lot of money in stable coins anyway. Okay, just use it as a mean of exchange, which is more convenient to use than it would be to use cash, because then you would mean that you would have to go back to your bank, transfer money out from crypto account to the bank, and so on. So it's convenient to use stable coins, but not as a long-term strategy. But the ones that are more used are Tether, so USDT, USDC, BUSD, and also the Terra, UST, and Paxos as well is a well-used one. And now, and also these are all dollar-pegged stable coins. There are also algorithmic stable coins, which are not collateralized by US dollars, but they're collateralized by a basket of other cryptos. And the most famous for that is the DAI, which is from the MakerDAO Foundation. But also Cardano just launched its own algorithmic stablecoin called DGED. And there are other algorithmic stable coins in the market too, which probably going forward they are going to represents the majority of stable coins in the market, and we move away from from the US dollar pegged into more like crypto assets as collateral.
My question came as well, not just to keep money as in stable coins, but I think in certain stage, if you, for example, want to exit from certain currency, cryptos, I mean, then I just thought then it is like a middle stage or step you just transfer then instead of letting it cryptocurrency price go down, you just transfer it to some stable coin. It is it is what I was thinking, just or my question was around this one.
Yeah, this I think I answered that question. Is basically USDC, USDT,
Yeah.
BUSD. These are all they're all good. They all got high liquidity, so they're pretty safe options to have.
But thank you that I didn't know that there are difference exactly. It is why I asked. Yeah.
Okay, what was that question, Duncan? You were saying about Julie?
It was a point Julie made when you were talking about holding assets rather than cash. She said, "What about the fact that they're probably going to take our property as well as we become totalitarian states?" So I propose maybe we do a politics hour, but then maybe not. Then we'll be doing religion hour, and then nobody will be talking to each other, will they? We'll stick to cryptos. What do you think?
Yeah, I mean, yeah, no, it's not a silly question, Julie. Actually, it's what sometimes I go a little bit too much on the tangent, because I tend to think 10 years down the line. Okay, so this is how I think, and sometimes it's a little bit too much for people. So I rein it down a little bit. I keep on that, but what's happening right now, and I think this is the big narrative of this era that we're in right now, and the next 10 years. We are looking at a transfer of power between the baby boomer generation and the new generation. Okay, so we have, if you in every country in the world, the baby boomer is the generation that came from, say, at the end of the war. So people that were born, say, between 1945 and 1950, whose parents actually fought in the war and came back and then just started rebuilding, okay, the world that we're in now. So that generation is the largest demographic group, okay, and also they hold the most power in terms of money, okay, in assets. So What's happening now is when you think about somebody that was born even in 1950 now would be over 70. And so they will be coming out of positions of power, and new generations are getting into those positions. Now, what happens if you have a generation that doesn't have the reins of power anymore, but holds all the assets, and you got a new generation that has the power but doesn't have the assets? So with they looking at wanting to get some of those assets, okay? And how do you do that? How do you do that, you might ask, and what we are talking about is a new way of doing things. So the new generation is putting everything up for discussion again. And where before we were too busy rebuilding the Western economies and all that to think about anything else, now it's just, okay, why do we have to do things this way? And the answer often is, well, because we've done it this way for the past 200 years. When we had that discussion, I don't know if any of you watched the Michael Saylor discussion, where he was talking for Bitcoin, and I can't remember what the other guy was that was talking about gold. And the guy that was supporting gold, he was saying, well, gold is going to win this because it's always been around for the past 5,000 years. And that was his main point. And they go, well, but anything is worth only if somebody else is wanting to buy. If the new generation doesn't want to buy gold, and instead they buy Bitcoin, it means Bitcoin is going to be more valuable, as simple as that. So this is going into not just the value of money, which is just one aspect. I think our democracies generally are under discussion again, because now we have an alternative. There is a way of doing things. Now, just to give an example, we've had, this year we've seen the US elections. Okay, what's happened after that? There has been almost half of the US population that thinks that those elections were fraudulent. Okay, so how valuable, for example, would it be if you could cast your vote on the blockchain, and the moment you cast your vote, you can see on the blockchain that there is a certificate that you have cast your vote. So you know that your vote is valid because you can see, and you know that it has been counted. In a way, kind of like in a different way, just think about it in, who likes tennis here? I'm a big tennis fan, for example, okay? Now, if you go and look at most of the tournaments now, don't have line judges anymore. Why is that? Because they got a computer. And what happens when a computer comes along that can tell if a ball is in or out? It means that you don't have McEnroe anymore that says you cannot be serious. Because now McEnroe just say, well, there it is. Look at the recording, or they see the ball is clearly out. So there is no discussion anymore because you got proof. Okay, so this will affect every aspect of our life, and it's also, just think about it. How does a nation state goes on? They raise funds. How do they raise funds? With taxes. Now, taxes are a very modern affair. The income tax in the US was only introduced in 1913. Okay, so is there another way of doing things? Could we collect those taxes in a different way that doesn't require a country like the UK maybe employing 500,000 people just to check that you pay your taxes correctly? If that could be automated, how much money could it be saved? For example, just one little thing. So elections could be run differently. This is the first time, naturally, there is a mechanism in place that could allow for direct democracy, because it could be possible for people to vote on every proposal, for example, that is put forward in Parliament. Now there is a technology where that would be possible. I don't know if it's desirable or not, but it is possible. So all these things are up for discussion, and we can come for new way of doing things and rewriting a lot of the way that things are done. And this is really exciting, because I don't think in our lifetime we've ever had this kind of conversations. Just an example, maybe the only time I remember here in the UK when we had the AV referendum, alternative voting system, which is basically a different, instead of being first past the post that wins an election, is instead of voting for, I don't know, candidate A, B, or C, you would say, okay, my first preference is for candidate A, but if he doesn't win, then I would like candidate B to win. And if he doesn't win either, I will like candidate C. Okay, and what happens is that every round, the person with less votes gets eliminated, and his votes get redistributed to the other people until one has got more than 50% of the votes. So basically, it's a way of getting consensus around certain choices. And this system, by the way, it's used in the US for Alaskan primaries. Okay, so this is the way in Alaska they select their candidates, and then they vote. Because if you think about it, just look at the American system, where it really is entrenched with two, Republicans and Democrats. So you go 50-50. Okay, but there are many states, if you take away the swing states, there are many states that for the past 50, 60, 70 years have voted one way. So you know that in that particular states, you're going to have a Republican candidate being elected. You know that in the other state, you're going to have a Democrat being elected. So the question is, who decides the candidate? And if you have closed primaries, where only people that belong to the Democrat Party or people that belong to the Republican Party can vote to select the candidate, it means that it's a small percentage of the population that makes a decision of who is going to represent that state in the Senate or in the House of Representatives. So maybe, and you know that not many people actually belong to parties anymore. So that means that maybe 10% of the population or less is deciding who should win an election. Is that fair? Is that fair? Just answer that, And so these are all kind of like new methods that are made possible by this technology. I mean, it could be done even outside of this technology, but this technology is making it very, very easy, very easy to use these alternative systems. And the fact that we can talk about it, and the fact that we can discuss it, will bring a lot of change. This change obviously is going to be resisted by the current administrations, because the current administration represents positions of power. Nobody wants to relinquish their power. Okay, so whether that organization is called the Parliament or is called the SEC or whatever else it is called, it represents a delegation of power. So it's not, they're not going to give it up easily, but it will happen. It will happen one step at a time. Sorry, have I answered that question, or have I completely lost myself going off on a tangent? I can't even remember what the question was.
I thought it was great. It was about the totalitarian states taking our properties, and I thought it was great. And we were also having really nice chat in the chat while you're talking today. And it's not that we're not listening to you; it's just that we're agreeing amongst ourselves with what you're saying. Everything I was talking about, vested interests such as those that control the money and power, always wanting to slow down progress and being resistant to change. Naturally, I guess. What was the names of the algorithm stable coins Luca mentioned? Well, DAI was one, wasn't it?
The DAI is the one that's been around for ages, but there are some more. If you just Google it, just Google algorithmic stablecoin, you'd see. And Jonathan was there. He just posted the results of the Cardano votes in the funding system that they have in Cardano. Okay, so there's almost like 300,000 votes. That shows you a way that elections can be run. And this is a community of, 44,000 wallets that have taken part in the votes. Okay, so this is done for the Cardano community, and it's their funds that are being generated, and they go into a fund to support interesting projects. They need some funding, and people that belong to the community vote on how those funds are allocated. Okay, this is just an example of voting on the blockchain, and this is why I think Jonathan posted that. But that obviously is grown from from very small to now it's we got over almost 300,000 votes on it. So many countries are actually smaller than that. You can run some small countries' voting system with that principle. It's not that far away. It's not as far away as you think, guys. That's what we are trying to say. Okay. Duncan, you have to help me out to see if there are any other questions, because I can't talk and read at the same time.
Absolutely.
Yeah.
Well, actually, what we've got here is quite some useful shares. As you saw, Jonathan shared that. Archie has mentioned that there is a bit data of a huge global Bitcoin festival running today from 10 a.m. UK time, and she shared the link, which is quite nice. And also for I don't know.
Can I just give a proviso that festival is run by Success Resources? Okay, so be very careful.
So it's a sales festival, is it?
Pretty much, yeah.
Okay. And what about the gold Bitcoin debate between Michael Saylor and Frank Gerstra? Who are those guys?
Yeah, this is the one I was talking about. The one I was talking about before, that was referring to. You can watch it. It happened a few months ago now. I don't remember now, 2 or 3 months ago. You can watch it. It's on YouTube. It's quite interesting. It lasts about an hour. Yeah, very, very interesting. For me, it was kind of like a, a little bit simple in a way, because they are talking about things that for me are pretty obvious. But it's funny because just see what you think. For me, Michael Saylor completely won that discussion hands down. But I've heard people the days after, they're saying, "Oh yes, Frank Gerstra was completely right," because I think that many people are completely closed in the way they think, and they're not open to new ideas at all. And sometimes it's interesting how you can hear the same thing but have two completely different opinions on it. Sorry, this is Mila saying, why are you so positive on Cardano versus Ethereum, Bitcoin, other coins? Not so much in particular Cardano. I know Cardano maxi by all means, but simply just have a look at the way they do things, and have a look at the way the other blockchains do things. I mean, Cardano I've used a scientific approach every step of the way, and all the criticism that you hear about Cardano is because they are too slow. But at the same time, guys, we put in technology in place that can run whole countries. In 5 years down the line, you want to be careful. You want to make sure that everything is correct and everything is being double checked, treble checked. You don't want to rush into things. And unfortunately, the attitude that some other blockchains have had, like Ethereum, for example, it's just like, kind of like, let's throw some stuff at the wall and see if it sticks. If it sticks, we'll leave it there. If it doesn't stick, we'll throw something else until something sticks. So it's a different approach. I personally prefer the scientific approach, although it is slower. And the Ethereum approach is something that is used a lot for new technologies, which is fine when a technology is new and exciting and nobody has thought about things like that before. You have to try things. But once it develops into a mature technology, I think you need a different approach. And so I like Cardano approach, and kind of like similar to that as well, Polkadot's approach as well. It's not kind of like by chance that you get two of the original founders, which are Charles Hoskinson and Gavin Wood. They left Ethereum because they didn't agree with the way it was being run, and they created blockchain projects that will bring the whole blockchain industry up by a couple of notches. So it's not just their projects, but because they are doing things in a different way, it will now set a different standard in place for everybody else to follow. So this is why I am positive about it, not because of it's Cardano rather than another project, but because I like the way they operate. By the way, another small project that I often talk about that I really like the approach of as well is Algorand. Algorand I really like, and I've got a very similar approach to Cardano, very scientific based. It's come from, mainly from the Massachusetts Institute of Technology, and look into that as well. Prices and everything, they're much smaller than Cardano and other projects. It doesn't mean that the innovation is any less important. Okay. Any other questions?
Eric says the Cardano CEO is touring African countries to support governments with Cardano. Interesting.
Yeah. They've just announced a they're already doing a project with Ethiopia. They also announced recently a memorandum of understanding with the Burundi, and they're visiting several different states, talking to different heads of states about how they can help them, bring them into the blockchain era. And many of these countries are very interested in that. You think of something like Burundi, whose economy is, maybe 0.5% of the economy of New York, so it's not really important on the world stage, but they got over 10 million people living there that can then sidestep all the obstacles to them being part of the global economy. If they can go into the blockchain directly, they can be on the fast lane straight away. So it's life-changing for many people, even if the impact of Burundi on the world stage is not going to be large, but the impact of blockchain in Burundi can be huge. So this is why I like Cardano. They are doing things. They're not talking about it. They're actually doing things on the ground. They're making a difference where it matters, guys. Okay, so just follow Charles Hoskinson, and it's very active on social media. You can follow him on Twitter, and you can listen to him on YouTube. It's I think he's inspiring. But do make your own, listen to it and make your own judgment. He's been to South Africa. That was the first step. Pierre was the first step of his Africa tour. Was in South Africa, and there's a nice video as well of a session they did in South Africa. Can't remember where it was. I think it was in Johannesburg. But might be wrong. So there is an online video of a couple of hours of him being questioned in a particular association in South Africa. I can't remember what it was.
Jonathan's got a question about Bitcoin ATMs. And do you know what? Weirdly enough, last year I was in kind of Americanized craft beer bar near to the airport in Saigon, and I thought it was a kind of quiz machine up by the side of the bar, and I went over to it, and it was a Bitcoin ATM, and I just had a look at it. You couldn't put currency into it. You could only use a card. And because I didn't actually use it, I don't know where the Bitcoin go. I'm assuming you'd have to give it an address or something. But I have actually seen one in the flesh in Vietnam a year ago. What do you know, Luca? Anything?
I've never used one, but from what I've read about El Salvador, and it might be different types of ATM machines. Obviously, they're basically programmable bits of kit, depending on what you program into it. But from what I understand, in El Salvador is two ways. So you can put cash in and obviously buy Bitcoin with that to put on your wallet, or you can use it to get cash out. So you can use it either way, and this is part of the reason why it's been so successful as well in El Salvador.
So I suppose it differs to an ATM in as much as with an ATM, you've got your funds behind the machine, as it were, and your card is really just to identify you and give you access, isn't it? I think from what I can gather, and I read a bit about the El Salvador machines, they're more like an exchange machine, aren't they? So whichever you've got, you're going to swap rather than access what you've got inside.
Well, yeah, obviously, because if you want to get cash, which is a different thing from what you've got in your account, I mean, you got Bitcoin in your account, and you take out US dollars. So, but this is the same as any other. There are some crypto cards, for example, where you can use cryptocurrencies at the point of sale, and those are not you don't pay in Bitcoin at the point of sale. They will exchange it for dollars or pounds or wherever you are in the world. So they're always that at the moment. There's still that step is always present. So the moment that you deal, between cash and crypto, there is an exchange going on. So we're not at the stage where you can buy directly with Bitcoin yet. But it is possible in El Salvador through the Lightning Network, for example. But for most people, there will be that exchange element when you're going between crypto and cash. So you basically you connect your phone to the machine, and then you access your Bitcoin wallet, and then you exchange some of the Bitcoins in your wallet for US dollars. So this is what would happen.
Luca, I've got a very late last minute question, even though we're well
Yeah.
over time. You mentioned to me, and I think it was probably on a call, so you mentioned it to everybody, and I had a look at it. I can't remember the name of the site now, but it is it's based in the States, and it allows you to make international payments on the blockchain at virtually almost zero cost. But when I went on it, you recommended it to me because we were talking about transferring internationally. When I went on it, it said at the moment we can only serve US clients, and we're looking to roll it out. So my questions are, can you remind me what the website was, if you can remember? And secondly, do you know anything about it, about their rollout? And is that going to be taking over the world? Because it looks absolutely fantastic. It looked like it would end Western Union and you know, all the other payment systems.
I can't remember exactly what we were talking about, to be honest with you, in that particular example. But I know the Stellar, there are the two protocols that are used for cross-border transfers are the Stellar network and XRP. So the two big players in that space.
Okay, well, I'll try and find out.
I can't remember.
Yeah, I'll try and find it for next week because it looked like absolutely fantastic.
Coty, are you talking about Coty?
It's not Coty, no, and I don't even think they've got their own coin. I think it's just literally a payment gateway, and their USP was that because it's based on blockchain using cryptos, they can do it for pretty much next to nothing. Where even the cheap online services obviously charge you a few dollars, but however, you do it.
That could be probably the Lightning network that does transactions on a layer 2 on Bitcoin. I think you might be the Strike. I don't know if you're talking about the
Strike. That's what it was.
Yeah. Strike is the app that's been used in El Salvador as well. This is the one that basically they help El Salvador set up the system. So although then El Salvador developed their own wallet, but it was based on their knowledge and on their IP.
Okay. Looks fantastic anyway. I can't wait for us to all be able to use it.
But if you can look at, more generally, there would be other apps that can do that. If you look at for the Lightning network, which is basically what they are using, what Strike is using, which is a basically Bitcoin layer 2 solution. Okay, so you do transactions outside of Bitcoin and then once or twice a day the transactions are bunched up and recorded on the Bitcoin blockchain. So instead of having to pay, let's say, one transaction fee for every transaction as you do on Bitcoin, which will cost you $7-8 per transaction, you can have thousands of transactions and pay one transaction fee for all of these. And so the transactional actual fee for each transaction is pretty non-existent, and that's the beauty of it. Although there are some issues about security, because between the time that the transaction goes on and when it is recorded on blockchain, there are some vulnerabilities. So there's always a kind of like you give one way and you take another way. Okay, so nothing is perfect.
There we go. And yet another lesson for the day. It's been a fantastic call. Vladimir has had to go, but thank you for joining us as a somewhat a newbie. Anything you'd like to finish with, Luca? Because we are a little over time, and I think you've delivered, as a football manager might say, 150% again.
Yeah, no, it's just the one thing that I want to just remind everybody is that the last quarter is going to, we just got started. So we're seeing the new highs, all-time highs in Bitcoin and Ethereum. This is just the start of it, guys. Okay, so if you're still sitting on the fence, just come off the fence and get involved. Okay, and it's not an advert for telling people to come to me, and for them, for me to, that's whatever way you can get involved, please do it now, because this is once in a lifetime opportunity. That's all I wanted to say.
Great. Guys, thank you so much for your feedback that I've been collecting in the chat while Luca's been speaking. I am going to download that and go over it all. Obviously, the point of it is so that we can make sure we're keeping it useful. And also, obviously, Luca's designing his new micro school and all the rest of it. So we want to make sure that everything's relevant and useful. And I'm hoping maybe by next week, we're going to come back to you and tell you about a wonderful offer on that for friends and family in time for Christmas. Because what Luca's saying, I found to be true. As I said in the chat, I've started to kind of pass the information on that we're getting from these calls and also from the private groups. And all of a sudden, my younger son has stopped asking me for money because he's put a few quid into a few cryptos, and he tells me he's not touching it. I don't believe it. I'm sure he's using it for a bit of income, but it's this knowledge is valuable in more ways than one, guys. So my mission coming into through Q4 and towards December is to make it as easy as possible for people to spread this information across our own networks, because Luca often talks about generational wealth, and I know he means something different, but my younger son not asking me for money all the time is what I call generational wealth.
Is your wealth especially, isn't it?
Absolutely, yeah. All right, guys, thank you very much for all being here, and hopefully see everybody next week, and I hope everybody has a super duper successful week, and especially, of course, thank you to Luca.
Goodbye, everyone.
Cheers, guys. Bye-bye.